session we are going to have on operational risks during the fifth industrial revolution. Especially in the critical sector like banking, it is very important to understand these risks. Our speaker for today, Dr. Kembai Srinivas Rao.
Yeah, thank you very much, Arvind ji, for that introduction. And I will try to live up to your expectations as far as the deliverables are concerned. Have been put under restrictions by Reserve Bank of India under Section 35 of Banking Regulation Act. And why RBI was compelled to do so, I think we can all make out. Same is the case of market risk, that if the value of the securities fall, then you will have to make mark to market. You will have to make up for the losses. And at any point of time, it will be very glaringly coming before you in the form of various data points. And the MIS will speak for itself that there is a huge risk that is piling up. Now, I was just telling our the audience that operational risk is very much. What is business ecosystem? It is a sum total of people competency, technology competency, business associated risks, regulatory dimensions, macroeconomic settings, connection with the global geopolitical risks, and connecting with the rest of the world, because has accelerated, and the Red Sea blockade of trade, and then diversion of need to divert the passage of cargo and things like that, and what has been its implications on the supply side dimensions and the cost implications, insurance implications, and things like that. My short point is what happens in the rest of the world, how the ecosystem is tuning, growing up. But what is coming along with that is the risk. So let's see. We will be discussing for about 10 minutes on the pattern of industrial revolution and how it has manifested various kinds of risks. This particular slide will be very important to the youngsters who haven't gone into the industrial revolution pattern as to how it has evolved over a period of time, because in 1780, it is considered as Industrial Revolution 1. Indian economy, because basically we are the agro-based economy. And I think there is no better person than Dr. Farid Ahmed to tell us more about how the agro sector is critical for the economy. Industrial Revolution 1 has started with, if you remember, the use of steam in navigating the machines. That means there was a lot of time which was taking for the change to happen. But when we have started entering into Industrial Revolution 3, when some kind of a feeble computerization or automation started in the industrial system, those young generation which have joined the banking system of, after 2000, they have not seen the kind of computerization that we used to have in 1970s, 80s, and 90s. But it has taken only 30 years for Industrial Revolution 3 to Industrial Revolution 4. And then we have started having integrated technology. That is, the branch is computerized, and bank is also computerized. And we started having data storage system and data centralization system, and online kind of banking and things like that. When we have started having, this is what we call Industrial Revolution 5. It has taken only 20 years for transition from Industrial Revolution 4.0 to Industrial Revolution 5.0. 120 years for 1 to 2, when compared to that, 2 to 3, 70 years, 3 to 4, 30 years, and 4 to 5, they will tell you how the risks have started happening, like co-working. So that's the kind of robots which will be taking care of 60 to 70% of our routine activities, which add new customers online now. Kotak Mahindra Bank, I think Mr. Uday Kotak was one of the architects of corporate governance. system that we have our youngsters, that is millennials and Gen Z customers. They are the major portion of our customer base, and gradually we will see Gen X exiting from the system and Gen Alpha getting added to the banking system customer profile. That is those who are born after 2000, 2010 in a trade-off to the long-term advantages. So what's very important is today's profit is important. I don't undermine it, but it should not be at the cost of long-term objectives of the organization. So not just profit is important. That is why you will, if you open financial dailies, you will find everywhere regulation of AI. Their capacities are manifold. Their dimensions are manifold. Their shapes are increasing, and technology exists for us. Unless we start making it work for the good of the humanity, the new generation will be on a slippery slope, and it may lead to mass precipitation of risk. So Industrial Revolution 5, when we are working, where creative people can come together to work along with the machines. That is why Arvindji very correctly said that the people will be working with machines in collaboration to create. It is incumbent on the part of the people to understand the nuances of interdependent, interconnected risks. If you are not doing that, that is predictive models. We are now using analytics-based predictive models for what we call the PD, that is understand the kind of risks that it will manifest, and then start managing those risks in a better way. So if you don't understand the nuances of the intricacies of the new tools of technology, then it will be very difficult for us to understand how to manage them. The purpose of this webinar itself is that you decipher the risk,